Welcome, and for those of you who are watching from home, hopefully you're going to find today some of the information that you will need to help you get your business set up accounting-wise. Our offering, we're very glad to be able to present it to Morgan City and Berwick residents, and the way our format will go is just basically an introduction. I'd like to introduce myself. My name is Monica Mancuso, and I'm with St. Mary Excel, a group that's working in the Morgan City and Berwick area for community improvement, especially in economic diversification. We'll go over a little bit of background of how we came to this part, and then we'll turn things over to Mr. Tim Mott, our presenter for today. There'll be a few questions, and then also we want to make sure that you're aware of all the seminars, because we are a part of a series. This is our third seminar in a series of 7 seminars. The way that this all got started is with a $135,000 funded project that involved a lot of people in the Morgan City and Berwick area saying what did they want to see take place. And we're about 2 years into the follow-up. We received our report in January 2019. I guess it's 2.5 years now that we're into the follow-up. The report that came out was called Morgan City and Berwick, Louisiana, Building the Foundation for a New Economy Along the Atchafalaya River. And the report was quite detailed, and the report was comprehensive, and so it's taken quite a while to make our way through this book. One of the things that came out of the book and was a pointing to some resources, and one of those was the USDA Rural Business Development Grant that we were pleased to find out that we were eligible to submit an application, and we did that over the course of 2 years, and in the second year we were funded. That is how this presentation is being presented to you today, with funds from that grant. So we're really excited to get that. One of the things that we've come to find out is it's really nice to watch things on YouTube and other instructional videos, but it really doesn't speak to the people in our area. So we're very pleased that we've been able to tap into local talent. Our presenter today, receiving his education from Nicholls State University and becoming a certified public accountant. And I'll doubt if anybody can present any better practices, because for over 40 years he's been providing accounting and tax services for our retailers, manufacturers, contractors, shipyards, and local governments. And I really think it's just incredible that he's also our former mayor for Morgan City, because that comes with a plethora of things right there. Now then, I really want you to realize that we've got just a few more opportunities this fall to tap into this business support. On November 3rd, Mr. Gerard Bourgeois will be forming a limited liability corporation. You might find that of interest, so be looking for that. Also, some of the things that kind of trip some business owners up is, how do I get my paperwork submitted in accounting services? How do I get all of that reconciled and in good format to please whatever entity that we have to report to? So we'll be presenting again, Mr. Mott will be back on November 10th. And then one of the important ones is, and I've heard some very experienced business owners say that they would benefit from getting ready for tax season. Tax season always seems to always throw a few loopholes with especially changing rules and laws, and how can we best take advantage of the things that are allowed to us. Then Mr. Bourgeois will be back one more time, because historic and cultural district tax incentives can really provide some relief to those of you who wish to expand your businesses through construction, and you happen to be located in a historic or cultural district. And that's pretty much how we're going to end this fall semester. And in the spring, we're going to do something different, where you as a business owner in the Morgan City and Berwick area will be able to book some time with Mr. Mott or Mr. Bourgeois for something specific to your business. In other words, it's nice to hear it, it's nice to get things going, or it's really nice to have an idea of how you want to move forward, but you've got some questions and you may not feel comfortable asking those questions in an open format. So we're going to arrange in the spring for some time specific to you. So once again, we're very excited. We are recording, and we hope you're watching from home. And we've also got our third-time attender, Ms. Colleen Askey, that we're very appreciative that she's here. And I know her questions, along with the ones that I have and been written down already previous to this, will make for a really good seminar. All right, Mr. Mott.
We hope it will be a good seminar. But yeah, what we're going to discuss today is setting up your accounting system for a small business, and we'll start with a small business, but the rules and the discussion would apply for a business that's a much larger scale. But most of us start out small and hope to build that business. One of the first questions that I usually get from somebody who's got an idea for a new business and wants to pursue it but wants to make sure they're doing things the right way is how do we form it? What are our options for entity choices? There's always that question of, do I have to form an LLC? I've heard of that. Not sure if that's a good thing, bad thing, whatever. And so that's kind of a good starting point. Should I incorporate? Should I? Do I have a partnership? So I thought I'd start there, and then we'll build off of those discussions. So first off, the entity choice. Anyone can start a business. The process is, can be very simple. I'm in business. That's okay. That's all you have to do. You are now a business. Now you need to go about your licensing and all those kinds of things, but it can be that simple. And you don't have to form an entity, a separate entity, to be able to do it. If you're concerned about the name you selected, there is a process with the Secretary of State to deal with the name of the business. But Tim Mott doing business as whatever I may choose, can happen just overnight, just by virtue of saying that, and go out and start a business. If I'm an only owner, then my entity choices are, one is to just be a sole proprietorship, which means I'm going to include my income and expenses on my own individual 1040. It'll be a separate schedule, but it'll be on a 1040, and I'll handle the income and expense reporting at tax time, just like I would when I file my individual tax return. If I have a partner in the business, then we have a decision to make. By default, if there's two owners of a business, then the default selection is that it's a partnership. And when I say default, I mean per IRS rules. If you have more than one owner, you're a partnership. You can choose to be something else. So I can choose to be taxed as a corporation. I can choose to be taxed as the partnership, which is the default solution. If I have two or more owners, I can also, or if I'm a single owner, I can form a limited liability company under Louisiana laws, and it's really more of it's not a tax decision in that sense. It's more of a legal liability decision and legal form of business decision. But forming an LLC goes by the same rules. At that point, if I am a single owner, the default entity selection is that I'm a sole proprietorship, or what's called a disregarded entity. So it's real common, and I'll use this as an example because I think it happens for a lot of folks. I form an LLC because I want to go buy a rent house. I don't want to have any liability for anything that might happen at this rent house beyond the assets of the entity, so I form this LLC for liability protection purposes. That doesn't mean I have a separate tax return to file for the LLC. I can choose to treat it as a disregarded entity, and the same thing I described with a sole proprietorship or a self-employed person, I just include it on my 1040. Okay, but if let's say it's a service business that I'm operating now, I can elect to treat it as a disregarded entity, even if it's an LLC, as opposed to just Tim Mott doing business as. Okay. Then, after that, I think, some other considerations as to the legal entity then needs to be taken into consideration. Is this going to be a business upon which I'm going to have to borrow some money? Am I going to have to get a contractor's license as a result of the formation of this business or the type of business that I want to do? There's an opportunity for a contractor to do work below a certain dollar level without a contractor's license, but once you get over a certain dollar level, then you're required to have a contractor's license. That requires a filing with the Louisiana State Board of Contractors, and they have some specific financial requirements. And the biggest one is, one, they have some testing requirements, so they have to take a test to pass their contractor's license, depending on the area of work that they're doing. But number two, they have to show some financial wherewithal, and that's usually accomplished by a financial statement that shows at least $10,000 of net worth. If I form that business entity and I can put into that business, and QuickBooks for that matter, not only have that entry level software package, but they can transition you to their bigger, better versions depending on the nature of your business. And even in these cases, even in the case of, say, a QuickBooks Online, which is relatively simple, there are a lot of modules that go into that. Not only can you track your income and expenses, which is obviously the first thing that we're looking for, but also you can enter your invoicing in there so that you maintain accounts receivables. What do people owe me? And being able to print out reports that might be that will be useful for your own business, but might be useful for you in dealing with your bank. For example, hey, what's my accounts receivable? What's the age of those receivables? How many are 30 days old, 60 days old, or 90 days old? That type of thing. And then accounts payable, the same thing. How much do I owe to all of my various vendors, and when are the due dates for those, so that I can plan my cash flow as a result of those. They also have inventory. They usually have fixed asset systems. Now, inventory is the product you're selling. So if you're in a service business, inventory doesn't come into play. If you're in the retail business, though, you maintain an inventory, then inventory is something that's important for you to track. If you go out and spend $20,000 on inventory, and in the first month you sold $5,000, you don't have a $15,000 loss because you still have some inventory there. So being able to track that to properly report to properly maintain your balance sheet and to properly report your profit and loss, that's an important item. Another one that the majority of these all provide for is job costing. And job costing is important in those construction projects. So let's say I've got one or two or three maybe construction jobs going on in various stages. Being able to track the cost of each of those jobs so that I know how profitable I was on this type of job versus this type of job, or how profitable I am on this one. Some on maybe time and material, some on a lump sum. Hey, I put in a price, I gave them a price of 10 grand, I've got to do that job. I don't get to charge any more than 10 grand, so keeping track of what your costs are to determine how good you were at estimating and all of those becomes real important in managing your business and going forward. And most of these accounting software packages can help you with that. Once you decide to make that move to go into one of those, then one of the next, decisions you'll need to make, and it'll depend on each of these companies. Most of them have choices. Some of them are only one or the other, but that's to decide whether or not you want a desktop version or an online or cloud version. There are advantages and disadvantages with each one. In the case of let's talk about the online or the cloud versions first. Typically with the online and cloud versions, the actual software provider, the company, is providing you with the the maintenance of that software product. So in other words, if through their processes or their customers' processes they discover a bug in the program or whatever, they're fixing that for you as you go along. So it's not one of those situations where you run into a problem and you're like, oh, I don't know how to make it do this. They're helping to modify that. One, the support they have for it is instantaneous. Well, once you get them on the line, it's instantaneous because they can go into your system and make those changes. The other, one of the other advantages of it, and I'll use QuickBooks Online as an example. What QuickBooks Online does, it provides you with the opportunity to invite other users to your software package. So you set it up, or perhaps you initiate the purchase and subscription to QuickBooks Online to set up your business. But you want your accountant to have access to it for helping you with that, whether they're in your office or not. It's as simple as this. You provide the email address and the permission to your accountant. They get an email from QuickBooks that gives them access to it. They access it there, and they can go in and make changes. They can go in and review. They can go in and comment and all of those things to keep your system up to date. And we do have several of our clients that are doing that today. And it may be, hey, I didn't know what to do with this particular transaction. Would you take a look at it and see if I did it right, or where it should go? And there again, I would just simply log in, look up the transaction that they're referring to, see how it got like it is, either make a change or make a recommendation depending on my relationship with them. Some of them may want me to fix it. Some of them may want me only to suggest the changes. But all that's pretty seamless. And then come the end of the year, and they say, hey, I've got all my transactions in. Let's go ahead and close out. I go in there, can take the information off of their accounting records and immediately move into a tax filing. If they also called and said, hey, the bank has asked for a financial statement, would you take a look at that and see if everything in there is correct? And then I can do that and say, yes, I think it looks okay. That's not an audit of it, but that's just simply a look over to make a determination for them. Then that can go. Then they can print it out and send it to their bank and go from there. In their, and also because it's an online version. Not only does both the business owner and, in this case, their accountant or perhaps their own in-house bookkeeping staff, they can access this from any location. So I'm out of town, but I happen to have my laptop with me, as I did last week, and it's just a matter of logging into the particular software company's site and that particular client, accessing their files and saying, yeah, that's okay, you're good to go. No, you need to make this change. Here's the adjustment I would recommend. Here's the adjustment I would make, whatever, and take care of that from whatever particular location. That can be really useful for, say, that contractor I mentioned who's out in the field and maybe needs to check and see if, hey, did that bill get posted? I'm looking at the stack of materials here. Let me make sure that got recorded and could actually go in from from a remote location and check to see that that's been recorded properly. So it does give you a lot of flexibility. Like everything else, there's always a con, and the con is, to me, on the side would be security. Now those companies spend a lot of effort, a lot of time and money on protecting their online or cloud-based versions. I would, attended a lot of seminars over the years and had the experts talk about that. It's all kind of a comfort level. Some of us older timers, The idea of something being out there in the cloud seems to us to be risky. But on the other hand, those companies are typically larger and obviously have more resources to put in security than my little office down in Morgan City, Louisiana would have, and perhaps depending on the expertise we might have as to putting in the right firewalls and other protections to keep things from happening. By the same token, somebody like a QuickBooks Online, I would think anyway, that they would be a more likely target for somebody looking for information than they would be this little, CPA firm down in the middle of nowhere type of scenario. But that to me is one of those debates or discussions that you would look at, and I mean there's information available by the company to tell you what those protections are, so that you can hopefully make some sort of a determination on that. Using QuickBooks, because it's such a popular one, I'll also refer to their desktop version. So the other choice would be the desktop version. Now, I will tell you this, just from my experience, the desktop versions are, for the most part, a little bit more robust in that they offer a little bit more sophistication in their systems. They can handle certain things that maybe you run into some problems with on the online version. If you're a small, simple business, that may never come about. So there may not be significant differences there. But they are useful also in that whole scenario I was describing, calling the sharing. And that is a QuickBooks desktop user can share with their accountant a copy of their general ledger for the exact same purposes I'm describing, to engage that accountant to review the transactions and to help make adjustments and correct things. In that particular case, what they use is what they call an accountant's copy. So a client will email me an accountant's copy of their file. Excuse me. When I receive it, I load that. I have a desktop version on my computer, so I pull it up. I make a few changes, maybe make an adjustment, maybe make a suggestion, whatever, but let's say I make adjustments to them. Then I send that file back to them, and it gets uploaded into their system. They get an opportunity to accept or not accept, but they upload it into their system, and now we're together. And it's done by a particular date. So the beauty of that one is this. Let's say I have a client who has a December year end. So December 31st came, they're in January. Towards the end of January, they said, okay, I think we put all of our transactions in for December. I'm going to send you the December 31st copy, accountant's copy. So they send it to me. And in the meantime, they get to continue working. They're still putting in January and February's transactions. They're processing their payrolls. They're updating all of their files, and they keep working. Let's say sometime in February, I finally get a chance to take a look at theirs. I make a couple of adjustments for year end. I've not held them up, and they've not affected the work that I'm doing. So then when I do send them the updates, their system just catches up from there, and then they go forward from there. So that works pretty effectively, and it's really just a matter in that particular case of internet access. As long as we both have internet access, we can change. So I could be elsewhere as long as I can remote into my my computer, which is done. A lot of folks have that capability these days to get it. Now I'm not remoting into their computer. They're just sending me the file for me to work on, and so that's in the desktop version. And that's how we exchange information. I use QuickBooks as an example, but many of these have similar capabilities, many of these other software versions. And then inside each of those too, by the way, there are a variety of options. I mentioned earlier, you can upgrade and carry yourself through different versions depending on how big your business is and what type of capabilities. So you can start off with a very simple system and then grow it. Now, I'll use one very simple example that both the desktop and and online version uses. Let's say I start out my business and I just want to keep things simple, so I just basically am operating on the cash basis. I record my income when I receive it. I pay my bills, so that's when the expenses are recorded, and here's my P&L, here's my profit and loss statement, here's my balance sheet, which is basically cash and maybe a handful of assets, but mostly just cash and the assets, no liabilities on there, because I don't really need to keep track of that at this point. It's just too small. Then my sales start to grow, and now I have some receivables, and because of that, I have some need to be able to borrow some money from the bank, because I have money tied up in inventory and I have money tied up in accounts receivable. I got to pay my bills pretty much right away. So now I have a situation where my business is growing, so I need some working capital to be able to fund those receivables and that inventory. I'm making profit, but it's just tied up in those two other assets. So now I need to go to what's called the accrual basis of accounting. And the accrual basis of accounting is where I track how much people owe me, and I track how much I owe people in addition to what those income and expenses are. So instead of calling income when I receive it, I record that income when I sell the item or when I perform the service, and I record that expense when it's incurred rather than when it's paid. That's the difference between accrual and cash. Well, on QuickBooks Desktop and QuickBooks Online, there's a button, cash basis or accrual basis, and it's that simple. And so it makes it easy for taking that next step. Let's say I've got a retail business, and so I haven't bothered with inventory because it wasn't that big. Now, though, I'm having to accumulate material. Supply lines are getting tight, so I need to have some stuff on hand to be able to sell it. So I need to add that module. That's really, in most of these cases, that's not a huge step to add the inventory module to something I already have, and without having to say, oh, I got to go buy a whole new version. And then, like I said, there are other versions though that you can move to. Most of these also provide, particularly in QuickBooks case, in most of these others will also provide the opportunity for payroll services. I always tell my clients when we start out with a new business, it can be a fairly simple operation, when you first start out. But as soon as you hire that first employee, now it's become complicated, and so then you get into the whole payroll and payroll reporting systems. Most of these do have that as an option. In addition to that, there are, if you really don't have the aptitude or the interest in doing that, one of the other options is to engage a payroll service. And payroll services are a good, I think, relatively low-cost way of implementing that. I mean, we provide it as a CPA firm. We can provide a payroll service, as most firms do. But in addition to that, there's some other companies that do that as a means of their business. And because that's all they do, if you will, they can do it on a relatively inexpensive method, usually based on a certain number of payroll checks and frequency. Do you pay weekly, bi-weekly, semi-monthly, or monthly? But they can bring you some sophisticated items like direct deposit, and they can handle all that payroll reporting, which is really that big step in the whole growth process. When you get to that. I mentioned earlier a little bit about other reasons for good accounting systems. So first off, for your own business management purposes, it's important. My last presentation to you guys was on budgeting. Most of these systems allow you to put a budget in. So not only can I determine how much did I sell and what were my expenses this month or this quarter or this year, how did that compare to what I budgeted? And you can put that in on a periodic basis. You can put it in on an annual basis, however you want want to do that, depending on how much time you want to spend on setting it up. But you can get those periodic reports to say, you know what, my sales are right where I thought they would be, but boy, these expenses are higher. What can I do about that? How can I approach those to try and reduce those so that I can either increase that profit or turn that loss into a profit as I move my business forward. Departmentalization is another example. Let's say I've got 3 different services I'm providing. Which one's making money for me and which one is a waste of my time? You know, these systems can certainly accommodate it and give you some really good feedback where you might, because of the weeds, you know, if you will, the day-to-day, the difficulty of running a business, you may lose track of some of that, and being able to sit down and put it into a good accounting system that provides that departmentalization may help you to focus on, oh, you know what, I make money when I do this kind of work, but I struggle when I don't. What changes do I need to do, or do I need to just say, hey, you know what, I don't really need to do this anymore. Let me just concentrate on the ones that are profitable and see what I can do with that. The other reason for a good, strong accounting system would be regulatory. There are certainly certain industries where reporting is important to them, and I use the example on the contractor's case, which is common, but it wouldn't be just for them. It would be for any business of any size. Let's say I have a bunch of employees and I have to cover them for workers' comp. Well, workers' compensation can be a pretty expensive expense that you have to cover, and a good accounting system that gives you the opportunity to provide periodic financial statements to that insurance company can return to you savings in that. The stronger your finances are, the more likely to get a good insurance quote from either a general liability perspective or a workers' compensation perspective, and so it can pay for itself in that particular regard. And then lastly, of course, we have the whole tax reason for having to report. You know, every time we file a tax return, that return is subject to audit for generally 3 years. And so in the event you were to get audited, you are going to need to be able to not only show what those expenses are, but what's the documentation for those. And so it starts with your accounting system, your general ledger, and then goes back to the actual backup for those, which are the invoices and all of those. So, you know, we've got to have a good accounting system, a good record-keeping system to be able to support those. And then banking, you know, without a doubt, if a vital part of growing a business is to have a good relationship with your bank, being able to produce financial statements when you need to borrow money initially, when you need to increase that line of credit, when you need to finance that new piece of equipment you want to buy, when you want to finance that the building or that maybe you're leasing today, but you think it'd be a good idea to own it. For all of those reasons, a good financial statement is going to help you to do that. And what I mean by a good financial statement, what I really mean is an accurate financial statement. Having a profit on it is a good thing too, but an accurate financial statement that adequately reflects what the results of your operations are going to be important. And it starts at the beginning. It starts with being disciplined and diligent about getting these things recorded so that you get what you need there. And then probably at the maybe one of the most important reasons for a good accounting system that gives you good financial reporting is that perhaps at some point down the road you might decide you want to sell that business, and or somebody might say, hey, he looks like he's doing pretty good, I think I might want to buy that business. Well, the first thing that a prospective purchaser of a business is going to want to see is, well, show me your financial statements. Because what they're going to have to determine from their financial statements is this business viable? Is it one that I can also be successful in and perhaps grow that business. And then also those financial statements may help determine what that actual worth is. Typically, businesses are valued based on their ability to produce a profit. And that annual profit amount is discounted over some time period, and that helps to determine the purchase price. If all you say is, well, I'd sell my business, it's worth $1 million. No, I don't have any financial statements. You're just going to have to take my word for it that it's worth that. You're not going to get very far. Not only that, whoever is looking to buy that business may have to go to the bank themselves, and they have to finance that business that way. So the financial statements become important in that regard. So the bottom line is a good accounting system set up properly, keep you out of trouble with the IRS, keep you out of trouble with the state of Louisiana and the other regulatory bodies, give you good feedback as to how you're progressing, how your business is developing and growing, where there's opportunities to make money, to improve your business, and then perhaps at the end of the day, be a conduit to a good offer for that business from the standpoint of maybe perhaps being able to sell that business at a profit to yourself and improve your net worth. So with that, I think what I'll do is turn it over to you guys for some questions.
All right. Well, I think just from what I've heard that, it was very thorough, and it really explained, especially those accounting packages and all the functions that you can get from it. If, let's say I use this video and I learn everything that I can, is there anything that's credible? Because a lot of entrepreneurs these days, they're learning so much through the internet. Is there a better series, or is there a series that is available for a young entrepreneur to watch?
I will say this. In fact, a lot of times, a lot of clients will come to me after having already done some research and just ask, hey, will this work for what you need? Mm-hmm. And so, there are resources out there. Of course, most of the companies' websites are selling their product, so you keep that in mind. But I'll share this with you. I've found myself around the house these days, this week particularly with a broken lawnmower. Let me go on YouTube, and guess what? There's a video on how to change that. Okay, that's the part I need. I'll order it. It comes in. And Sunday afternoon when I got back, I fixed my lawnmower and was able to cut the grass on Monday. So things worked out. With QuickBooks particularly now, and I'm sure the others also, but with QuickBooks, I have found that there are videos that will help explain how to record a particular transaction, how to do things. So there are random QuickBooks videos out there, not necessarily produced by QuickBooks. They may be produced by others who consult on QuickBooks and so forth to help with those kinds of things. Now, some of them will be maybe perhaps over people's heads. Some of them will be too basic. So sometimes it just depends on where you are in finding, and it may take a little while to sort through the variety of things that are out there. But there are certainly resources like that. Now, the other thing with a company like QuickBooks, who is owned by Intuit, they produce a large number of videos to help their customers with that too. So those are opportunities. Not everybody's suited for that. Mm-hmm. Not everybody has the time to do that. There again, that's where somebody who's in the accounting business can perhaps help them as much as anything. Look, I'm gonna get this, and I'm gonna keep it up as best I can. But it's always good to have that backup and say, hey, would you take a look at that? Did I do that right, or does it look right to me? Could you fix it for me? That's always a good opportunity, and I think these resources have gotten to where they're pretty user friendly in that regard.
All right. Is there anything that's unique to Louisiana, like QuickBooks? I'm sure is a national. Are there anything specific to Louisiana about getting this accounting set up? Is there anything that
There's no there's nothing that's unique to Louisiana that would require, oh, this Louisiana version is better than, whatever. Now, most of those, I mentioned the payroll packages, that's where it would come into. If I had an operation in multiple states, I would have perhaps the potential for having Louisiana employees and Texas employees and Mississippi employees, and so yeah, that can get kind of complicated. But most of those national packages that are offering that payroll service can accommodate that, as can these payroll services I mentioned. In fact, somebody was describing me the other day. They went to one of the payroll services because they had Puerto Rican employees. Really didn't want to learn anything more about Puerto Rican employees other than it's being taken care of properly. So they went to a payroll service and said, handle my payroll for me. Some of these employees are Puerto Rican, and they had to handle it that way. So there are resources out there like that.
Wonderful, wonderful. Does QuickBooks do, I know there's something called depreciation of assets. Does it fulfill that? They
do have a fixed asset system, and that's a good point. I didn't really talk about that very much, because one of the tricks in financial reporting, depreciation is typically recorded this way. I buy an asset, I spread it over its useful life. So let's use a forklift, for example, and let's say the useful life of the forklift is 7 years. Okay, so if I bought that forklift for $84,000, then I get to write off $12,000 per year for each of the 7 years, and that's proper financial statement accounting, and that's how you would record that. But for tax purposes, I can elect to deduct that item, write it off all in 1 year under the current tax law. So I can take a deduction for $84,000 in a year when I make that purchase. Or I can elect to spread it over that time period, but I have some options in that particular regard. So these systems do offer depreciation, but we also need to consider whether we want to do book depreciation and tax depreciation, or use the tax depreciation for all purposes. That's a good discussion to have with your accountant or your CPA as to what the advantages are. When you look at it, if I don't have to produce financial statements, I'm not going to the bank, I'm not borrowing any money, I don't want to do any of that, it's just for tax purposes, well then it's simple, I just do the tax depreciation. But if I buy a forklift and write off $84,000 this year, and now I have a $50,000 loss on my business because of it, and because of depreciation, that's not going to make my financial statement look good. So therefore, I might want to do something different if I'm producing a financial statement for a bank or for the insurance company or for whatever. So those are some of the discussions.
So that would be a good, I guess, example of how you put all the information into QuickBooks, but at times you need advice.
Exactly. That's a great point. You're right, because yeah, it's accounted for. It's there, but I have some options of how I handle it now. What's going to be in my best interest, and that can change. I'm not worried about that today. Okay. All of a sudden now I've got this great opportunity, but in order to do that opportunity, I got to go out and borrow some money. And the first thing the bank says is, bring me your financial statements and your tax returns. Well, yeah, I should have lost, and they may not like that. Hopefully they'll understand. Well, look, I've been taking this accelerated depreciation, and that's why I had the loss. I really have a profit, whatever. So those are the kinds of things where having some advice and looking forward to where you want to be becomes important.
Okay. So that speaks to those best practices that we talked about, where you have 40 years of experience in seeing how some have effectively used things such as how we depreciate inventory or an asset can really come back to bite an owner, or could be, if it's done right with good advice, it could really move the business forward, which is what everybody wants to do.
Exactly, and there again, is this just my little side gig that is always going to stay my little side gig, or is what I'm really trying to do here is develop this so that this becomes my full-time job, and there for. And I think one other example, and thinking about my term, the side gig, the other thing we need to consider, a lot of times we end up with these initial small businesses might really be a hobby that somebody is interested in turning into a business. And the tax code and tax court dockets are full of examples of hobbies that people have purported to be businesses. And where that is really critical, and where the accounting system comes into play very strongly, is in this regard. I'm going to use one example that I remember reading some cases on. But let's say I'm breeding dogs. Okay, got a puppy farm, if you will. Okay, breeding dogs. Is that a hobby or is it a business? Well, you can sell the dogs and you can make a profit doing that. But you got to feed them, you got to get them to the vet, you got to do all those other kinds of things. And I'm traveling around to dog shows and these other things, and so I'm incurring expenses. So I end up with a loss. Well, I want to deduct that loss on my tax return to offset the other income I have from a full-time job that I have. Can I do that? Well, if it's your hobby, the answer is no. You don't. You can offset your expenses. So if I sold $10,000 worth of puppies and I had $15,000 worth of expenses, so I have a $5,000 loss, I can only offset the $10,000. I can't deduct the $5,000 against my other income because it's a hobby. But if it's a business, yes, I can take that $5,000 and reduce my other taxable income and actually have a tax savings as a result of that. So what's the difference between a hobby and a business? It's the profit motive. That's where that comes from. One of the first things they're going to look at when say an IRS agent is auditing you under those circumstances, first thing they're going to look at is, show me your accounting records. Well, if you have a brown folder with a bunch of receipts in there and nothing else, well, you're not really operating. You don't have the appearance of operating this as a business. It looks like you're sloppy in your accounting approach to it. It becomes very important. If you say, well, show me your accounting record, you say, well, here's the profit and loss statement I produced for the business, accounting for all of the money coming in, all the money going out, and all of those other things. I haven't solved my problem, but I've at least made the first step in that I've approached this as in a business-like manner. And that's where accounting records do come into play very strongly. And it's a very common situation where people take, hey, I enjoy doing this, and I would like to, I think this is something I could do maybe in my retirement. So I want to do this as I go along and maybe build this up to the point where I can after I retire, I can do this as a part-time effort and generate some family income as a result of that. Nothing wrong with that. It's a great idea. It's a great scenario. But you've got to make the jump from a hobby to a business if you're going to want to deduct those expenses against the other income that you have.
Okay, very good. Well, I think we've exhausted the questions that I've been able to generate. So,
okay.
Excellent, excellent. And tied with the other ones, I think it's making for a very good series. So, thank you, Mr. Mott.
All right.